Welcome to our session this afternoon on how investors are managing given the economic landscape. If anybody knows what that title actually means, please let me know. But that's what we're here to discuss. We've got 4 of the world's leading investors in hotels, and my aim with this session is to get them to tell us about all the issues which concern them most, well, at least those that they're connected to hotel investment, and between them and their companies, they're responsible, as we've heard already, for $1 billion last year and billions of euros invested in the hotel sector around the world, each with a significant proportion within Europe. And in Frank Billen's case, of course, we're in one of his hotels. Now, I've got a number of questions which I've prepared, but I'm really keen to get your questions. I know I can't see you very well, and if the house lights can go up in a little while, then I'll have an idea of who's in there. But we've got some microphones here, and I'm very keen that if you can ask the question that's burning in your mind, I'd like you to have the opportunity. So we've heard all of the background. I was going to give you a whole spiel about how occupancy went up, how average rate went down. One thing just occurred to me. With the fall in average room rate that Elizabeth was talking about, of course, that doesn't take account of the increase in travel agent commissions, which many hotels, indeed most hotels, probably have experienced in the last few years, and how that then impacts the bottom line. Sort of a shame that it doesn't find its way into the ADR and the RevPAR calculation. That's for another discussion. But values are up, transactions are up, and so let's get on to what our panelists have all been up to. ADIA, they acquired 42 UK Marriotts. They've recently acquired 3 Editions. Host bought the Sheraton in Stockholm. Union Investment acquired Motel One hotels, several of them in Germany, plus other assets. And Westmont bought the V&A in Manchester and the De Vere in Southampton, as well as selling their stake in the Intercontinental in Prague. Now, I'd like you, against this background, gentlemen, tell us what your hot buttons are. What keeps you interested in the hotel sector? What keeps you awake at night, indeed? But before doing so, I think it's important, just so that everybody knows, what's the difference between these 4 gentlemen and the 4 groups that they represent? So ADIA, if you didn't already know, a sovereign wealth fund, hotel assets mainly through management contracts with major hotel companies, although they recently entered the sphere of hotel leasing through an acquisition in Australia. Host, the largest hospitality REIT in the world by a factor of 4, Jim was telling me, exclusively held via management contracts. Union Investment, a German investment fund whose hotel interests are all held via leases, and Westmont, private owner and operator of hotels, founded by Majid and his family, and an attitude which can best be described as opportunistic. Huge investments in the global hotel sector, Canada, the US, Europe, the UK, even Japan. So, ladies and gentlemen, please join me in welcoming the panelists. And gentlemen, for your first question, I've just given a flavor of what you did in the last 12 months. Please extemporize, add a little in what you did. Jim, why don't you kick us off?
I'll talk about a bit more than the last 12 months and just give everyone a sense of what Host Hotels European platform is all about. We have been active investors in Europe since 2006. We invest through a joint venture with the government of Singapore Investment Corp, the real estate group, as well as APG, the pension fund of the Netherlands. Today we have 18 hotels in 8 countries. All in major markets, all upper upscale and luxury properties under flags that are managed by Marriott, Westin, Sheraton, Crown Plaza, the Hotel Arts in Barcelona, which is managed by Ritz-Carlton. Our total investment's roughly 2 billion euros. And we are still actively looking for opportunities in Germany, in the Nordics, and opportunistically in Spain and elsewhere.
Thank you. Majid.
We're a global investor, we're owner-operator. We have a big presence in Canada with the largest REIT in Canada. We have a presence in the United States and in Japan. And in Europe, we have a platform that operates from limited service hotels to luxury hotels. So, as Russell said, we are opportunistic and look for opportunities all over the world.
Okay. Mike?
Well, as you mentioned, we're a global investor, so we're looking at the major markets around the world, typically looking at upper upscale and luxury hotels in the high barrier markets and portfolio opportunities in the larger economies that can support portfolio investment. In the last year and a bit, we've done a couple of transactions in North America, one a mezzanine loan on some hotels in Hawaii. We've done a very large group house in Atlanta. As you mentioned, the UK Marriott transaction, and we completed a portfolio transaction on some Accor assets in Australia late in 2013. And then most recently, we've closed on the London edition and signed for the two in New York and Miami. So,
okay. Frank, to round off the commercials.
Yes, a short commercial. I make it short. Uni Investment Real Estate is a manager of open-ended and special funds. We have about dozens of them. And last year we invested into 7 hotels. This was out of a total investment volume of 2 billion euros, what we invest per year. So the majority is office buildings, shopping centers, logistics and hotels. 7 hotels I mentioned. In total, our portfolio is now slightly more than 30. And the priority now is more to focus on budget and economy hotels. Perhaps we come later to discuss it. And the one you are in here, this Intercontinental Hotel, is one of our very first generation hotels, hotel investments. And but we launched a new fund for institutional investors for budget and economy hotels, a 300 million euro fund. And it was in the beginning very difficult to initiate investors' demand for this product. Meanwhile, they are queuing up and there's more capital available than investment possibilities.
Wonderful. Now, the audience here is in great danger of thinking that we've fallen out with those 3. So, please, if you'll move to the next seat and I'll take yours, we'll at least dispel one of the rumors. Now.
Russell, that's just the lease model versus a management model. That's all.
Okay, so let's keep the tempo going. Keep the answers short because I think this audience is really interested in what you guys are all about. So everybody here is a potential investor. Here we have 4 of the most leading investors for hotels, at least in this part of the world, if not globally. What are the most important criteria that you look for, or the issues that you consider to be top of mind when you're making an investment decision? Mike, why don't we start with you? What are the most important criteria that you look for?
well, what we try to do is take account of where we are in the cycle, where we are on the risk curve. You know, I mentioned before that we've done mezzanine deals, we've done pref equity deals, we've done outright ownership deals. And so what we tend to look at is using judgment and, you know, from a lot of experience is where is the right place to be on a risk-adjusted basis. So what's the return you're getting for the risk you're taking? There was a point in time in the last couple of years where, you know, we did not find, you know, outright ownership attractive, and so we were more active in the mezzanine pref equity space. Later on, we found the opportunities that look better in you know, outright ownership, and we were able to act on those. So for us, it's a relative value question, because keep in mind that we're a much larger organization than just a hotel group. So you know, we look at hotel opportunities against all the other real estate asset classes as well. So what I'm doing has to kind of stack up against what my colleagues might be able to do in office, retail, logistics, and residential elsewhere in the world as well. So
is that competition for capital something that you experience, Majid?
Well, our approach is, in the ideal world, you want to buy at the right point in the cycle. You want to buy from the right seller. And we have a value add component. Generally speaking, we look at assets to see where we can add value, whether it's repositioning, some rebranding, some renovating. So we have a multi-pronged, approach to where we can create the maximum value. Now, we may not get everything right, but if we get some of this right, we can then give the right kind of returns.
And that's opportunistic,
Generally,
in a
yes.
word. Okay, Jim, how about you? Do you apply any different criteria to what you've already heard from Mike and Majid?
I don't think it's any different criteria than what both Mike and Majid said. It's most important buying at the right point in the cycle. From our perspective, looking at value add opportunities on each individual asset, and then most importantly, being certain that our underwriting provides us with a premium over our cost of capital.
So how do you choose the right point in the cycle, Frank? Isn't that something that you only find out with hindsight?
At the moment, we have more or less not a cycle. We have seen from David Fenton, we are on a very positive development. So that is not the prime issue. Our concern is to look at the sustainability of the rent, of the leases, the rental income. We do some stress test with new products. With existing ones, we can look at the 2008, 2009 performance. Second, we look at the quality of the products, the operator. Is it a growing brand? And if we have a sandwich situation where our tenant is not the operator, it's very important that the operator takes care of the quality of the hotel, FF&E and all this stuff, and so it is guarantees and the normal stuff.
Interesting, talking about cycles. I heard someone say last night that the hotel industry is characterized by a 10-year cycle and a 5-year memory. In that sense, I think we've all got something to learn. Let's go back to your own investment strategy, just to say how your investment strategy is perhaps different from others. Do you feel that at this moment in time, the real focus should be on the distressed assets that are out there, the distressed assets that perhaps aren't yet coming to market? And what's your strategy for teasing out, Majid, teasing out of the banks more of this product to come out into the marketplace?
Well, teasing out is not an easy thing to do, but generally speaking, I think that if we target markets in which there is a lot of assets that are controlled by banks or have a great influence from banks, once the banks realize that they need to clean up their balance sheet, there is more activity. This is what's happening in the UK and Ireland, as we have seen. There have been more transactions there because the banks have taken on the responsibility to clean up their balance sheets, and you have the good bank and the bad banks, and that's happening. So I think what we're seeing is, when we look at Europe, the UK and Ireland is ahead of the curve in terms of transactions getting done. There is a significant amount of non-performing debt that is still out there that needs to be resolved at some point. So I think it's a question of time. And also what's happened is that the capital markets are also now in the favor of some of these banks, and as we can see, the recent transactions are getting done at pretty high numbers. So one thing the banks have to take into consideration is new valuations, and with the passage of time, in the previous session you heard that they're holding on for 3-4 years, but some of the banks are reviewing their assets, writing them down to what is realistic values, and then get them offloaded as such.
The question is to your special business raising these kind of assets. Are the banks more willing to sell than 2 years ago or 1 year ago? Are they more under pressure now?
I think in the UK you've seen that happen. I think the European banks have still not fully taken that step yet. So we find, for example, there's a lot of non-performing loans in Spain and other parts of Europe, although Euro-immune Germany doesn't seem to have as much difficulties.
Okay.
You haven't actually done much in the way of buying underperforming assets at all, have you?
Not in the hotel sector. So we are a classic core investor, and we look on stabilized assets, and this is more Majid's specialty,
Right.
but not ours.
Right. This wall of money that everybody's starting to talk about, and particularly that which is seeming to be lining up across the other side of the Atlantic, and the amount of transactions or the volumes of transactions that have taken place there compared with here. Jim, we were talking earlier in the day, and we were talking about a lot of interest in foreign banks coming over here and really shaking up the market, and other types of debt providers and so forth. What's the opportunity for you in riding on this wave of potential investment? Where do you see yourself coming into Europe?
As I mentioned earlier, we have been active in Europe with our first investment occurring in 2006. So I think we have a very good feel for the markets and the places we want to invest. We feel that over the course of the next 2 to 3 years, as banks start to take action to liquidate their bad loan portfolios, one way or another, the hotel assets that are associated with those loans are going to come to market, whether it's through direct purchases of the loans from the banks or acquiring those hotels from the buyers of the debt. It's going to take some time, but in certain markets, there should be very good opportunities to buy assets at prices that are significantly below replacement cost, just given how badly certain of the markets have been beat up from a RevPAR and an operating perspective.
Okay, and Mike, from your perspective, capitalizing on your acquisition of 42 Marriotts, do you see yourself trying to repeat that in other European countries and other countries that you're more interested in than others?
I think that if the situation arises where there's an opportunity to deploy a significant amount of capital, we would be interested in that. But I think that pursuing distress for the sake of distress isn't really part of what we do. There's a lot of times when you find distressed deals, there's a reason they're distressed, and it isn't just the capital structure. So you have to be really careful when you go after those sorts of things. But the UK Marriott's is a good quality portfolio that was just a group of investors caught out at the wrong point in the cycle. I think that I go back to my days at IHG when we were selling down and going asset light, and I'll never forget that when I saw one of the portfolios trade at a sub-5 cap rate and they were able to borrow 88% of the money, that was sort of a sign that something wasn't quite right. And,
Okay, I've got a question just linking what you last said, Mike, but I just want to pause and give the opportunity to anybody in the audience who has that burning question on the tip of their tongue. If you've got a question, just shout out, because I can't see you very well.
Yes, I have a question.
Okay, can we just get the house lights up a little bit and give this gentleman his 10 seconds of fame?
Okay, yes.
Tell us who you are.
Yes, good afternoon. Macy Marvel. I represent Mintel International, which is a commercial publisher in London. My question for each one of you is to tell us which markets would you be sellers in, whether you own hotels there or not. Could you identify some markets where you would be sellers of hotels?
Well, Majid sold a hotel last year that we know about. Why don't you kick off the answers? Where would you tend to look to sell?
Well, on a global basis, we have seen a significant recovery in the United States. So we are disposing of more assets in the US than we are in Europe as such. So on a global basis, the markets that have turned around a lot have been primarily in the United States area. But as far as Europe goes, I think it's on a selective basis, and in some cases we have funds who partner with us who are coming to the end of their life. So there's not just one particular market in Europe. I think generally Europe has more legs to a recovery than perhaps the United States does.
Anybody want to pick up on any aspect of this?
I would just add that, I don't think I would have a view on any particular market. We're a bit more selective than that. We're never under any real pressure to sell, so we typically only sell when someone pays us more than we think it's worth the hold. And that's really what makes the world go round a lot of times. I've been at ADIA now 5 years. We've sold one asset.
Yeah, it's the approach I like, the subtlety of that.
Yes.
I know a good example for this. We sold Mike 3 years ago, they were married in Paris. So that was 3 years or 5 years or 4 years? I don't know.
It was 2011.
Yeah,
11,
it's 2
yes.
years.
That was such a case. But I think these days there are no markets where you have, in Europe at least, where you have to sell. All the markets are, we have seen these green arrows here on the map, and we sell hotels when we think there is a good timing now, asset-wise. We look to the asset and to the lease contract, and we think that could be now a good moment. That's the moment when we sell hotels. And this year we actually have plans for selling 1 or 2 years.
Watch this space. Thank you, Macy, for your question. Ladies and gentlemen, anybody else with a question? I will come back to you, don't worry. This won't be your only chance, but anybody with a question? Okay, can we get I can see a hand, third or fourth row. There's a microphone just coming to you.
Hello.
Hello, who are you?
We came all the way from Brazil. We have a project of a hotel there, and we'd like to know how you see the market in Brazil.
In Brazil?
Yeah.
A long way off. Jim?
We're very bullish. Host Hotels is very bullish on Brazil over the long term. We've opened an office in Rio. We have people on the ground. We own one hotel that it's operating, the JW Marriott in Rio de Janeiro, and we're in a middle of a development project for 2 other properties. So over the long term, we're very bullish on Brazil.
Is there financing available in Brazil? Last time I looked at it, you had to have individual investors clubbing together in order to finance
Financing is
it.
available, but it's very expensive.
Yeah. Okay. Thank you. I'm glad you at least came all the way and asked a question. Shame on you, those who've come only a few hundred miles. Okay, back to my questions. I'm going to change the tack a little bit. I think we've talked about investment, and most of the front row is now asleep. So let's pick up the pace. Let's talk about the difference between leasing, management contracts, and franchising, and how you see the attractiveness of each of those from your own individual perspectives. Frank, I sort of boxed you into the lease-only corner before, but other areas, other instances where you would look at owning a hotel that isn't leased, for example?
By law, we are forced to focus on leases, so we have to look for ways to find a lessee. Sometimes it's this triangular structure that is formed by our hotel investment team. The deals are sometimes very complicated, but they work in a healthy way. And each time in this conference, there is a forecast that the lease is dead and that we have asset light and no more leases. And I find it's such an amazing story about the budget hotels here in Germany with Motel One, where we bought a portfolio last year of 4 hotels, where entrepreneurs have shown that with leases they can be very successful and very profitable. And other players are doing it similar. I know it's happening in Germany, not all over the world, but a lease is still a healthy business if you do it in the right way. And we have seen these changes, for example, with Accor, from asset light to asset heavy. Is that correct? Or
Heavier.
Heavier?
Heavier.
Okay. Heavier, yes. So I wait and see. Perhaps next year we talk much more about leases. Than
well, hopefully we'll get the opportunity somewhere in this event to ask Sebastian Bazin on his latest strategy. But in the meantime, Mike, you went, when your days were with IHG, you went into a heavy asset light mode, really focusing on management and on franchising and so forth. What's the key element of that, and what has made you dip a toe into the leasing water now?
Well, I think that a lot of the big major operators went asset light. I guess it started with Marriott when Host was spun out, or predecessor to Host. But I think for us, we like the management contract model better just because we like to participate in the upside. Even the lease deal we've done has got a fixed and variable component to it, so there is an upside component to that, to those leases. And we have a very strong team of people that understand the business very well. We have an in-house asset management team that knows how to work with the operators to drive the results, and we're very comfortable with the risk associated with the management contract model. You do need to be careful when you're buying, because obviously you've got on a management contract, you've got most all the downside and most all the upside. So you just have to be careful and know what you're getting into. So.
Now, Majid, you play all sides, sometimes at the same time, I guess. But do you have any real feel as to what your real desire is?
Well, we come from an operations background, and we know how to do it the hard way. We invest in the assets, we have control of the management, and we use the brand through a franchising setup to help us with the sales and marketing and what their strength is. As you know, most of these hotel companies have become asset light and are very strong on reservations and the support they provide the hotels to create more business for us. But I think controlling the operation, because in our business we think we need two things. We need management and we need capital, and we make sure that we have the ability to manage the assets ourselves.
And you need the brand.
Oh yeah, yes, we have strategic alliances with brands in a big way. Yes.
Right. Jim, have you ever been tempted to set up your own management?
We talk about it from time to time, but as a real estate investment trust in the U.S., we are prohibited from becoming a manager. Mm-hmm. So we've augmented our staffing internally with a very strong and effective asset management group, as well as our own revenue management function and a feasibility function. So we think we do a very good job asset managing the brands. And there is, I believe, a break point where a franchise operator like a Westmont will likely deliver more value to an owner than a brand will on the smaller hotels, maybe 300-400 rooms and under. But in the United States, our portfolio is comprised primarily of larger properties, a lot of convention center hotels, a lot of big meetings hotels, group hotels, as well as a number of the properties in the States, in Europe are of the same ilk. So we're very comfortable with a management contract model. We happen to be the largest owner of Marriott hotels and the largest owner of Starwood hotels in the world. So we have great relationships with both of those operators, and if we have an issue or concern, they listen and they address it. If I can for a moment, because Mike just did a lease deal in Australia with Tal, and Frank is doing lease deals, I'd just like to add that we are also starting to spend some time looking at opportunities where assets are subject to a lease today. In fact, one deal that we did do with Accor in Tal, we talked about this morning a little bit, was a portfolio in New Zealand that was subject to a lease, but we unwound that lease and turned it into management contracts. So we think there are a lot of attractive features of the lease model, and we'll be looking more closely at those opportunities going forward.
Okay, let's just pause there and see if there's anybody else with a question in our audience. Do raise your hand or shout. Okay, I just want to pick up on management contracts and negotiations with the management companies, because it strikes me that with what you've just said, largest operator of Marriott's and Starwood hotels, huge exposure to many of the big brands. Does that not give you the opportunity to negotiate some pretty impressive, more owner-friendly terms? And are you making any strides towards being able, for example, to be able to take the brand away when you might choose? a sort of dignified divorce as opposed to a frustration of the contract, I hasten to add.
I think that's a difficult goal to accomplish. Certainly if it's in a dignified way, when you say so, Mike.
Well, it's like a prenup as opposed to...
Well, I think you have that opportunity if you enter into a management contract on a hotel that had been unencumbered. Then you have some flexibility to negotiate certain provisions regarding what happens when the asset is sold, or even after a period of time, whether it's selling it VP or selling it subject to a franchise. But typically the hotels that we have purchased have already been encumbered by management contracts, and unless there's a trade, and many times there is a trade that the brand needs, whether it might be relief from an area of protection or another matter that's existing in the contract. It's difficult to just go in and say, I want to sell the hotel unencumbered.
Would you be prepared, Mike, to agree a slightly higher fee structure in exchange for a more generous, let's say, walk-away policy?
I think, well, yes. I mean, everything has a price, I guess. But like Jim, most of what we've done has come with an agreement already in place, and so we've sort of underwritten the agreement that's in place. As Jim said, in a couple of instances, if you've got the opportunity to sort of run a selection process, you're obviously most likely going to get better terms there. But typically we look at going into those relationships for the long term, and you have to plan for the worst, but typically we're able to work through whatever problems arise, and we don't get to those divorce situations.
Even
come
on
close.
A dignified basis. Majid,
haven't come close. So.
Are you interested in sweetening, from your perspective, the terms that you can agree with your franchise partners?
Well, in most cases, you inherit a contract that's in place, but I think that we view those kind of situations as a partnership because we come, very much from an operations background. We try to work hand in hand with the brand, try to make their managers look good, which means the hotel will do better. So I think we try to work through that as opposed to trying to find ways to kind of call it a day. Obviously, it's nicer in some cases to have that flexibility from a value perspective, because sometimes long-term encumbered assets tend to have a cap rate that is a little bit less attractive on the exits.
Quite. Okay, so you're all in violent agreement with each other. Ladies and gentlemen, we're sadly approaching the time when we have to vacate the stage and let you go off to various other activities. I do want to give you the opportunity, if there is a question burning in your mind, to have the opportunity of asking it. Is there a hand in the air anywhere? Yeah, can we get a microphone to the fourth row here in the center? In the expensive business class seats here.
Hi, I'm Daniel Pugh from Jones Lang LaSalle. This is a particular question for Frank. Is there any particular standards or sort of covenant strength tests you had for your leaseholders that you're considering investing in?
You mean the coverage, rental coverage?
Not so much the rental coverage, but the actual covenant strength in terms of the actual company that you're considering.
Yes. Absolutely. We have in our portfolio, I think, about 12 different operators. We monitor very carefully their performance, which is overall, with all of them, excellent these days. And because for us it's a single tenant investment, and we look very carefully to the quality of the operator, financial strengths. We have our ratings and all this if it is available. So that plays an important role in our investment policy. Who is behind it, and what kind of guarantees do we get for being paid the lease? So all this is part of our investment policy.
Okay.
Thank you. Last question from out there in the ether. Okay, ladies and gentlemen, before I ask you to join me in thanking our panel, I'd like to ask them one final question, because you are all sitting on a pot of money, even though you didn't quite all realize it. But you, gentlemen, have been given by this wonderful audience a significant amount of investment capital at your disposal, no less than 500 million euro or so of equity. Now, it has to be invested by the end of this calendar year, 2014, and we are actually going to see if we can't measure your performance by this time next year, so that we can judge on your investment capabilities a little bit more practically. We'll see if that works, but in any event, Jim, what's going to be your 500 million equity investment within the European hotel sector?
I think we'd be prepared to make a pretty big bet on Spain this year.
Spain? Okay. Majid?
I think we'll be open to any opportunities that a bank control. 500 million, that's like a 1.5 billion of assets. I'm just trying to think where that kind of scale is available in Europe. But as we do smaller deals and portfolios, but I think pan-European, it's not just one market.
I'd love to go to a casino with you. Not that you're a gambler, but I'd love to go to a casino just to see how you put the chips on the roulette table. Mike?
I'm probably going to break your rule and not spend it.
Okay. So you'll just put it in a bank and get 1%?
I would sit tight.
You have to give it back if you don't spend it.
Yeah, you lose it. You don't get it. You can't have it.
It might be okay. So, okay.
No buns Rupert, as they say.
It's free money, or?
It's what?
It's not free money, I see.
It's not free money. No, it comes with strings. It has to be invested by the end of the year.
Yeah, I think, I've always hated the idea of forcing money into markets, and I'd be a bit more like Majid, I think, and I'd sort of wait and see where the opportunities are rather than try to force it in anywhere.
Dear, oh dear, I wouldn't want to play poker with you. Frank?
I follow a little bit Mike. As I had my 60th anniversary 4 weeks ago, I would look to retirement villages, nursery homes, and this sort of stuff. Okay?
Well, as I just passed my 30th birthday, I think I'm more into generator and mining hostels and so forth. Ladies and gentlemen, please join me in thanking our wonderful panel.